Hello and welcome to the Business Standard Morning Show. I'm Binu Sandhu. It's the 19th of September 2023 and here are the questions we will be answering today. Has cost trumped safety when it comes to airbags? What are three key takeaways from FM's interview with Business Standard? Time to add Zomato stock to your portfolio? And what is the US versus Google antitrust trial? The automotive industry can breathe easy now. The government has decided against making 6 airbags mandatory in passenger cars. Instead, Union Minister Nitin Gadkari left it to people's wisdom, saying they have become cautious and that they will prefer vehicles with 6 airbags. But will that work? And has cost trumped safety when it comes to airbags? Sanket Kaul and Abhijit Kumar find out.
If they want in the competition good sale, they have to make 6 airbags. If they don't want to make it, it is their problem. We don't want to make mandatory.
That was Transport Minister Nitin Gadkari, who recently announced that the 6 airbags rule for passenger vehicles will not be mandatory for auto companies. This comes a year after his ministry had made it mandatory to have 6 airbags in passenger cars for safety reasons. Let's understand from Puneet Gupta of S&P Global Mobility the rationale behind this policy change.
Government is leaving up to the consumers, to decide. So it will give a little bit of breathing time, for the OEMs before they really come up with next generations of models which are much more safety oriented.
There is a cost attached to placing more airbags, which will be passed on to the customers. According to government sources, the cost of installing 4 additional airbags may vary from 5,600 to 7,000 rupees as of March 2022. Also, the cost of re-engineered cars to accommodate the airbags would have increased the overall price of a vehicle. But thanks to the introduction of Bharat NCAP star ratings, the 6 airbag rule is now in the cold storage. While it is not mandatory anymore, is the move aimed at benefiting the automakers at the cost of passenger safety? Ravi Bhatia of Jeto Dynamics believes Bharat NCAP star ratings will be a benchmark for auto safety and trigger a competition among automakers in this space.
If somebody chooses not to meet the benchmarks, then they will be left behind and rejected by the consumer. It will also spur a lot of innovation in safety because now they can say, okay, that car is also 4-star, this car is also 4-star, but I am giving you a better way of being safe.
But does the safety of a car depend entirely on airbags? In a recent study by Global NCAP Kia Carens, the only vehicle to provide 6 airbags as a standard in the Indian market, received a 3-star GNCAP rating. This was less than the GNCAP rating of Tata Punch, which only has 2 airbags. The number of airbags is not always a measure of safety. In the recent case of the unfortunate accident of Cyrus Mistry, the car had 7 airbags, but that could not prevent the fatal consequence of the accident. So, experts believe that fewer but smartly engineered airbags in a structurally strong car offers better protection than just more airbags. But the move by Gadkari begs the question if safety measures in passenger vehicles be left to the market forces and consumer choice. Gadkari's assumption that there is a growth in the demand for safer cars seems shaky. The last month's data on the top 10 cars sold are those with very low NCAP scores. Experts point that one group of car buyers may want extra safety features, irrespective of the cost, but others may look for affordable options. This could lead to no consensus in the industry to follow on auto safety. So, how will the government's policy change affect customer safety?
Even if the government was to mandate it and every car had 6 airbags, there will be a lot of people left out of mobility. Making things mandatory is not a solution. So the choice here is very clear. Exclude people from mobility and make that special rich people safe and let everybody else travel by a train or a bus. Anyway, you can't retrofit it, right? Where will people default to? Used cars. Used cars don't have 6 airbags.
The move to retract the 6 airbag rule comes after several voices from the industry flagging cost overruns. While the government is pinning its hope on Bharat NCAP ratings to influence the market on auto safety, experts believe consumer demand will determine if cost will trump safety when it comes to airbags.
With the airbag decision, the list of the U-turns that the government has made in the last few months has swelled further. But some call it a trial and error approach. Moving on, in a recent interview with Business Standard, Union Finance Minister Nirmala Sitharaman spoke at length about a host of economic issues, ranging from inflation to growth. She also tried to dispel the opposition's fears that the country was going back to license Raj. Kasuri Akhil culls out 3 key takeaways from the interview.
Come November 1, and no one will be permitted to import laptops, computers, and related items without a valid license meant for restricted imports. While the government cited curbing potential security risks to citizens, Chinese imports, and promoting local manufacturing as the reasons behind the licensing policy, IT industry representatives and others have flagged concerns that the government is returning to the license Raj regime that existed before 1991. Union Finance Minister Nirmala Sitharaman, meanwhile, maintains that the country is not going back to the old license Raj, and that the intention was to support manufacturing.
The FM was quite categorical, saying that this shouldn't be construed as that the government is going back to the license Raj regime. She said that these measures are essential to help the domestic producers to improve their capacity. But she also said very succinctly that this is for a limited period, this is not going to be permanent, and this is very specific and targeted, and hence nobody should consider that this is going to last forever.
Another common concern among citizens has been India's sticky retail inflation. While the headline inflation eased to 6.83% in August from a 15-month high of 7.44% in July, the print continues to stay above the Reserve Bank of India's upper limit of the inflation tolerance band of 2 to 6%. While overall food inflation moderated in August, especially due to a steady drop in vegetable prices, experts are concerned due to scanty rainfall in August and a spike in global crude oil prices. So, what is the finance minister's take on this?
The FM was quick to add that the government has kept inflation under control for most of its tenure. However, he maintained that the government doesn't want to sit on the laurels, and it will do its best to help the poor to keep the inflation by keeping the inflation under check. And she also said that inflation is a permanent challenge, and the government is taking measures one after the other.
After selling tomatoes and onions at subsidized rates earlier, the government has now announced a 200 rupee per cylinder cut in prices of domestic cooking gas to cushion the impact of high inflation. This resulted in an additional 200 rupee price drop in an LPG cylinder for Ujjwala scheme beneficiaries, who are already getting a subsidy of 200 rupees for a 14.2 kg cylinder for up to 12 refills per year. Despite the rising subsidy burden, Sitharaman remained confident about meeting the fiscal deficit target of 5.9% of GDP in FY24.
She said that even when the fertilizer prices were up, farmers were never burdened, and they are committed to not burden the farmers. And particularly on the LPG cut, she said that Prime Minister announced that particular cut on the occasion of Raksha Bandhan. and not just to target Ujjwala account holders, but also to new account holders, which is around 7.5 million women, which going to be benefited from the LPG cut. So on the fuel prices also, she said that the government has done before, but on this state-wise, she said that the states are not very keen to cut or reduce the fuel prices. In fact, there are states who have increased the prices rather than reducing it.
When asked about the row surrounding Adani Group, the Union Finance Minister said that such incidents strain spotlight on corporate governance and help it improve. Even the markets are better informed about compliance, she said. The minister suggested that it will do a lot of good to the country. Finance Minister Sitharaman sounded a positive note on overall economic growth of the country. But there are concerns too. Brent crude price has been hovering above $90 a barrel for a while now. So the average price of the Indian basket of crude is likely to overshoot the budgetary projection of $85 a barrel. It may hit the current account. The fiscal deficit, meanwhile, has widened to 25.3% of the overall FY24's target in the first quarter of the fiscal year. It stood at 21.2% of the budget estimate in the corresponding period of FY23. And with general elections around the corner, the government wants to fast-track most projects. It will also loosen the purse strings for welfare schemes, putting pressure on the exchequer. But there is hope too. Direct and advanced tax collections have jumped more than 20%. About the new license mandate, however, experts point out the key challenge for the government will be to strike a balance between the interests of global economic players and local businesses.
India's impressive growth is being echoed in the financial markets. Benchmark indices are trading at a record level, and it has been a good run for the Zomato stock at the bourses of late. In the last 3 months, the counter has zoomed around 36% to 100 rupees apiece. The Sensex in comparison has gained 7% during this period. So what's fueling the rise in the Zomato stock, and what are the key levels that you should keep a tab on? Nikita Vasisht has the details.
If reports of a Zomato delivery agent riding Ducati and earning over 40,000 rupees a month sound unusual, the money that Zomato investors are making this year certainly isn't. From being the second worst hit new age stock in calendar year 2022, the stock of Zomato is the best performing new age stock thus far in calendar year 2023. It has rallied near 73% this year, touching the 100 rupees per share mark for the first time since January 2022. But the ongoing rally may slow down from here on.
With a dominant market share and strong growth in food delivery business, Zomato could deliver strong growth in the India's duopolistic market. Also possible and regular exits by some pre-IPO shareholders of the company, as well as erstwhile shareholders of Blinkit who have received Zomato shares under a share swap deal, could result in an overhang of stock supply. Sustaining high gross order value growth and strong contribution margin improvement of the core food delivery business for an extended period are the key monitorables for Zomato.
Zomato has been taking steps to improve its cash flow. It relaunched Zomato Gold in January 2023 to drive order volume while simultaneously rationalizing the dark store count over the past few quarters for Blinkit. As a result, the food delivery platform reported a first ever consolidated net profit of 2 crore rupees in Q1 FY24. Its gross order value jumped to over 7,300 crore rupees, while average monthly transacting customers grew to 17.5 million. That apart, it has been levying platform fee of 2 to 3 rupees per order since August. However, given that all positives are now known, analysts see limited upside in the stock from here on. The average price target for the stock, as per 27 brokerages polled by Bloomberg, is 103 rupees as against current market price of 102 rupees. Technically too, the stock is hovering around the immediate resistance zone of 103 to 108 rupees. The relative strength index, one of the key momentum oscillators, is also close to the overbought level with immediate support at 97 rupees. So what will move the needle on the stock going ahead?
And they even guided for more than 40% growth in overall revenue growth for next 2 years and 60% growth in liquid business. That's what excited the market. And going ahead, that figure will remain the same. The market will continue to focus on overall execution and faster revenue growth in combined business. And in terms of Blinkit, market will look for clues about when will they achieve their first level of target.
Overall, though the rise in Zomato stock may continue, it is expected to be slow in the near term. Today, on September 19, markets are shut on account of Ganesh Chaturthi.
He's making plans for an early retirement. Business Standard.
Let us now move on to a court case which is keeping experts across the world on the edge. The trial in the Google antitrust case kicked off on the 15th of September. The US Justice Department has accused the tech giant of abusing its dominance in the search engine market to kill competition. Ashutosh Mishra has more.
Tech giant Google is facing the biggest ever antitrust trial in the United States. Led by the US Justice Department and a battery of state attorneys, the trial kicked off on September 12th and is expected to last for about 10 weeks. Google is facing allegations of unlawfully exploiting its dominance in the search engine market and monopolizing it. The 2020 lawsuit that was filed against the company says that it unlawfully suppressed competition by paying billions of dollars to some of its rivals and business partners, including Apple, as a part of its exclusionary deals. This was to ensure that Google remains the default search engine on most phones and web browsers. The US government says that such practices limit consumer choices and hurt innovation. Further, the lawsuit states that the exclusionary deals that were made by Google denied market access to its rivals and helped the company in monopolizing the search engine market. It is important to note that in the past few years, the company has captured a whopping 90% market share in the United States, according to government reports. Google, in its defense, says that its browser agreements do not prevent any entity from developing or promoting other search engine platforms. The company, in its January filing before the court, also claimed that it is the smartphone makers and web browsers who want to set Google Search as the default search engine in order to provide their users with high-quality experience. Further, the company also underlines that users are free to switch to other search engines according to their will. There could be significant ramifications for the Silicon Valley giant if it loses the case. The court might consider breaking the company as a solution, since the Department of Justice and allies do not seek a monetary penalty against the company. There's another possibility that the company might be forced to stop paying Apple and others for making Google their default search engine. Any of these outcomes would result in significant revenue losses to the company and could be a blow to its current dominance in the internet space.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Around this time last year, a top European court had ruled that Google had broken competition rules. The court had imposed a record 4.1 billion euros in fine on the US giant. Well, that's all for today. For more news and analysis, please log into our website, business-standard.com. Thank you for watching.
If you like this video, share it and subscribe to Business Standard.
For more news, views, and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram, and LinkedIn.